been said that failing to plan ahead is planning to fail. And nowhere is that saying more true than in markets. Yet how many of us actually have a plan for the next bull run? Now, I'm not talking about your basic buy low, sell high strategy, but rather a detailed plan of action that you can use to extract as much profit as possible off Bitcoin during the next bull run, which now seems inevitable. If I had to guess, not many. Now, the odds are, if you're watching this video, you're likely a believer of the 4-year Bitcoin cycle, which we've been covering at length, that has sent it reliably up and to the right within a few months after each halving event. But having this conviction new all-time highs is only half the battle in trading. As I'm sure we all know all too well, the hardest part of trading is most often the most crucial part, taking profits. It's that moment in time when you need to go against the roar of the crowd and declare victory over the market and take your hard-earned chips off the table. That's why having a plan and a mental map of what the market will look like when you should begin taking profits is so important. And that's what we'll be focusing on in today's video, once again sponsored by our friends at CoinCall. How to recognize, react, and ultimately cash in on some juicy Bitcoin yield trading strategies using options when the market starts to show signs of FOMO. So if you haven't already, click the link in the description and create your CoinCall account today so you can more effectively not only follow, but trade alongside our Bitcoin options framework. Once again, today we'll be covering the phase of the market specific to when Bitcoin exits the green and enters the yellow range on our options trading rainbow chart. Now, if you were around in 2021 or 2017 and prior, you likely remember what this phase is like. It's the point in time when Bitcoin has eclipsed all-time highs and the bulls are on parade. Stealth mode, no longer. Bitcoin mania is everywhere, from social media to mainstream media. It's all people seem to be talking about.
What has been blowing us higher when it comes to Bitcoin?
It's a one-way ticket towards Bitcoin if you actually do the homework.
Well, Bitcoin reaching its highest level in more than 2 years.
BTC call buyers with strikes at around 70K to 75K, which are all-time high prices.
At this point in time, almost everyone who mocked Bitcoin during the bear market are now believers. And the people who were believers all along are adjusting their price targets ever higher. You'll likely see wild charts in circulation on Twitter at this time, with ludicrous numbers suggesting Bitcoin could run upwards of $1 million in short order. Gurus from Plan B to Michael Saylor will be vindicated, and you'll be getting calls from your normie friends asking if now's a good time to buy. Even you, a person who has dedicated serious time and research to Bitcoin trading over the years, may begin to feel underexposed to the asset. Your palms will even start to sweat as you feel the itch to crank that leverage slider up to 100x, and fire off a fresh new long that will inevitably end up liquidated. You know your fate, but you almost can't help it. The FOMO and narrative appeal at this time is too overpowering. When these signs start to hit, that's when I want you to remember this video, and realize the place we are on the options trading rainbow chart before making any rash decisions. Because if you follow along with me today, I'll show you not only the data metrics to be aware of that are hallmarks of this yellow phase, but also how to trade it responsibly, so you don't end up among the wreckage when the inevitable leverage washout comes. Consider today's video the antidote to Bitcoin bull market FOMO, where I'll show you the tricks market makers use to profit off a frenzy and earn fat profits no matter which direction price moves in. Think of it like earning yield on your Bitcoin holdings, using options. So without any further ado, let's begin discovering the yellow phase, which, just like a traffic light, signals to us that it's time to cool down on our leveraged exposure. The exiting of the Bitcoin market from the green stealth phase, or the prime time to be an options buyer, which we discussed in the last video, will be known when we see the realized volatility levels make an extraordinary leap as disbelief quickly turns into euphoria. Taking a look at the BVOL chart and comparing against our options trading regime chart, we can identify the two most recent past instances of this happening as December 2020 through January 2021, when BVOL catapulted nearly 2x from a score of 70 to over 130 in just over a month, as Bitcoin broke out above new all-time highs on its way to 40K. In May 2017, when Bitcoin made its first ever move above $2,000, which once again sent BVOL from a depressed score of just over 30 to over 150 by June. Based upon the performance after previous all-time high breaks, and the ultra-low sub-20 BVOL score we see at present, it's reasonable to assume that Bitcoin's volatility will once again behave similarly this time around, should it break past the all-time highs of last cycle at $69,000. And when it does, here's how you can capitalize on it. Remember how we discussed in the last video that options markets prices have a tendency of being inefficient due to their pricing models, which causes them to overvalue volatility when BVOL is overheated and undervalue it after it's been depressed for long stretches of time? This mispricing after a face-melting BVOL rip is where we'll get our yield from. As you might have noticed in the BVOL chart I shared earlier, during the 2017 and 2021 cycles, BVOL, or the amount of realized volatility experienced, peaked not long after the euphoric smash through all-time highs. This isn't a coincidence. The market is rarely ever as exuberant as the 1 to 2 months following an all-time high break. At these points in time, it feels like anything is possible, and the options market tends to price itself that way, due to the strong influx of demand for call options, which typically follows a new all-time high. A mental exercise, just imagine again the type of price projections we'll see if Bitcoin breaks past $70,000 this year. Forget 100K. People will be skipping straight towards $250,000 plus. And not only that, they'll likely be putting their money where their mouth is and betting on such price movements using options. Now fortunately for us, if you already own some Bitcoin or bought those December $70,000 call options we discussed in the last video, this market irrationality will be your chance to become their counterparty and earn some high-yielding risk for taking the other side of their bets. Here's how you do it. Let's imagine you already own a Bitcoin outright, or you bought that $70,000 December call option we discussed in the last video. Now let's imagine that sometime after this April's halving, say in June, Bitcoin makes a new all-time high above $70,000, and the market begins a march towards 100K, with BVOL once again skyrocketing to near or over a score of 100. At this point, we would be firmly in the yellow phase. But as we learned in previous cycles, this isn't necessarily the ideal time to cash out entirely. After all, Bitcoin's price could still double from here, the way it did in 2021, or even hit another 5x, the way it did in 2017. All we know for certain is that volatility levels will be overheated due to the FOMO in the air. And luckily, the options market allows us the opportunity to turn this FOMO demand into yield. The way we can do this is by putting either our spot Bitcoin or the in-the-money December call option to work for us by selling shorter dated options against it and collecting the risk premium if they expire worthless. In this scenario, we become the FOMO buyer's counterparty, just like a market maker. You're a shovel salesman during a gold rush. Think of it this way. If Bitcoin were to reach $100,000 by the fall, that $70,000 December call contract you bought during the green phase would have already turned into $30,000 of intrinsic value. At this point in time, the market would likely be so irrational that you could sell call contracts above $100,000, expiring in just a few short weeks, for a few $1,000s a piece. Maybe even more if the implied volatility level rises fast enough. Heck, you could probably even sell $200,000 calls for a few $100 each. Then when they expire worthless, guess what? All that risk premium you collected upfront becomes your new pocket change. No stress. This creates what's known as a long call calendar spread, which we touched on in the last video. You're long one strike with a far out date and short another with a closer expiration date. If you're just holding spot Bitcoin and selling these calls against it, that's what's known as a covered call. In either of these strategies, if price continues to rip upwards after you sell calls against your core position, you win anyway, as that means the gains on your spot or $70,000 call would have gone up more and offset your shorter dated losses. It allows you to play both sides of the fence, so your grass is always green. And if you're successful at it, you can run this strategy time and time again with each high volatility rip throughout the next bull market. You can even use some of that risk premium you collect to buy out of the money puts from time to time, in order to give yourself some insurance against your long exposure. Then you can sleep soundly at night without having to stress over the possibility of a market crash. In this scenario, no matter where price goes, up, down, or sideways, you'll end up ahead. It's a heads you win, tails you win scenario, and yet another example of why options, if you learn how and when to trade them based on a rainbow chart, unlock a world of potential for creative traders. So if you're ready to start unlocking this Bitcoin yield trade in 2024, here's some quick actions you can take to begin. 1. Follow the link in our bio to go to CoinCall and create an account today. 2. Subscribe to our YouTube channel and Espresso newsletter link, where we'll be sending out more videos like this, as well as multiple options market updates each week, complete with our cutting-edge in-house metrics, which we use to gauge risk-based decisions in real time. And of course, follow me and the team at Twitter. You can also find those links in our description. So until next time, thanks for tuning in. Happy trails and safe trading.